All right, hello everybody. Let's go ahead and get this started. Thank you for joining the webinar. My name is Mark Bollinger and I'm a research scientist at the Lawrence Berkeley National Laboratory. And today I am joined by my Berkeley Lab colleagues, Will Gorman and Joe Rand. And collectively, the three of us will walk you through a report that we released earlier this month that focuses on the surging interest in hybrid power plants. Specifically, this report tracks the status of operational and proposed hybrids as of the end of 2021. This webinar is being recorded and it is scheduled for 1 hour. We do anticipate having time at the end to answer any questions that you might have. So if you do have questions, please type them into Zoom's Q&A box there, and we will do our best to answer them either in real time or after the presentation is over. So this is the third year that we've done this report now, and during the first 2 years, we had a fairly consistent theme that there were lots of hybrids in the pipeline. The hybrids were coming, the hybrids were almost here. Well, I think, this year in 2021 is really the first year that we can finally say that the hybrids have arrived, or at least have started to arrive. Specifically, 2021 was a very big year for hybrids in the US, and in particular for PV plus storage or PV plus battery plants, which made up the bulk of new hybrid capacity that came online in 2021. To the point where at the end of that year, there was more battery capacity operating as part of a hybrid plant as there was on a standalone basis. And 2021 was not only a big year for operational hybrids, but also for hybrids in the interconnection queues, where we saw a 70% year-over-year growth in the number of hybrids entering the queues. And that's on top of what was already a very large base. So we'll dive more deeply into some of these trends, and we'll also talk about PPA prices, which we also cover in this report. But before we get into that, I just wanted to note that everything that we'll present today predates the Inflation Reduction Act, which was signed into law earlier this week. Obviously, the IRA contains some significant incentives on both the generation and the storage side, and both of those could impact the market for hybrids going forward. And so it'll be interesting to see how that all plays out, but everything that we're going to show today predates the IRA. So in terms of how this will flow, in a minute here, I will hand the mic over to Will to tell us about plants that were operational as of the end of 2021. And then I'll come back and talk about some PPA terms, PPA prices from a sample of PV plus battery plants with public PPAs that we've been tracking. And then finally, I'll hand it over to Joe to tell us what's coming down the pipe via a survey of interconnection queues as of the end of 2021. Just a quick note on what is and is not in scope. When we use the term hybrid, we're referring really to a co-located plant that pairs 2 or more generators and or that pairs generation with storage at a single point of interconnection. Once the plant meets that sort of basic requirement of co-location, it doesn't really matter to us whether the individual components are being operated somewhat independently, or if they are instead being operated in more of a coordinated or holistic fashion. The schematics here provide sort of a little more detail on these 2 different models. So on the left, the co-located plants share a single interconnection, but the components are operated somewhat independently. On the right, we have what's called the full hybrid model, where once again, you see the shared interconnection, but in this case, the components are operated in more of a coordinated fashion. It's a fairly subtle distinction, but it is a distinction that some grid operators make because it does sort of impact how these resources are seen on the grid. So again, both of these models are in scope. It doesn't really matter to us. We call them all hybrids. What is not in scope are so-called virtual hybrids that don't meet this co-location requirement. And I'll also just note that we are focusing primarily on projects that are larger than 1 megawatt of capacity. So our focus tends towards the utility scale systems. And we're basically ignoring any smaller residential or commercial, often behind the meter projects that are below 1 megawatt. So with that, let me turn the mic over to Will to tell us about operational hybrids.
Great. Thanks for that introduction, Mark. Thank you all for joining us today. So with the next 10 minutes, I'm going to go through a fairly quick whirlwind tour of our data on the operational plants at the end of 2021. So if you go to the next slide, Mark. So just real quickly on methods and data sources here, most of the data that I'll be presenting on comes from EIA's Form 860, which is a survey that goes out to owner-operators to collect information on generating resources. And we do a limited amount of spot checking with public announcements and power purchase agreements to validate some of the data, confirm that these plants are indeed hybrid plants. But we don't have these public announcements for the whole data set. So that's why we say limited amount of spot checking. The way we identify hybrids, for the most part, beyond these public announcements, is whether or not the prime mover technologies within Form EIA 860 has the same EIA ID. And so that suggests co-location of these plants, but it doesn't necessarily suggest co-control. So this is what Mark was just talking about. There are nuanced distinctions depending on how you choose to operate these plants. And for the most part, we don't observe how these plants are getting co-controlled or aligned. And so that's why we focus on saying that we are more confident that these are co-located rather than anything else. Few just challenges and limitations. As Mark mentioned, it's difficult to separate behind the meter resources. For the most part, we don't track small scale projects, but there could be behind the meter resources that are greater than 1 megawatt, but we really don't know. So it's not necessarily the case that all of these are going to be operating in wholesale electricity markets. So it's important to keep that in mind. And then finally, we exclude dual fuel and CSP units because for the most part, we're focused on co-located technologies that have different prime movers. Great. Next slide. So now I have a lot of content to get through in 7 to 8 minutes. And so we're about to move through it quickly. Just want to reaffirm that all of this is online on a website that I linked to in the chat. So as I move through this, definitely go to that website if there are details that I gloss over. So on this slide, the focus really is to say that there are a lot of different configurations of hybrid and co-located plants. You can see a different one in each row. And in total, we identify roughly 300 plants with 36 gigawatts of generating capacity, 3.2 gigawatts of storage capacity, power capacity, and then 8.1 gigawatt hours of storage energy capacity. And you can see that there are some standouts, one that Mark referred to briefly, which is PV plus storage. You can see that in the top row. And the focus in this presentation, not only in my section, but really when Mark comes back on and then Joe closes us out, you'll really see that the PV plus storage is a center actor in a lot of the development that we're observing here. If you go to the next slide, Mark, we'll jump into this in a little bit more detail. So we've pulled out some of the key configurations on that prior slide that we've seen the most activity in or interest in and highlighted them here. And so you can see these top line numbers about that PV plus storage are the most numerous. We've identified 140 operating plants. They have by far the most storage capacity attached to them at 2.2 gigawatts and the most storage energy amount at 7 gigawatt hours than all other hybrid plants. And that those statistics are corroborated by these weighted average metrics that we report on the right with higher storage to generation ratios and storage durations than the other configurations. But it's also important to point out, you see that fossil plus storage here from a combined capacity does still exceed PV plus storage. And that's predominantly because we have really large fossil plants that are pairing correspondingly less amounts of electricity storage nearby. But it's important to hone in on that configuration, because really compared to everything but PV plus storage, we really have seen the most, I guess, growth in this fossil plus storage category. So it has become a popular option for storage technology to get co-located with that technology. We go on to the next slide. So instead of just breaking things out by these average amounts, we also wanted to show the distributions of this storage to generation ratio, as well as the storage duration. But even when we look at the duration, the distributions of these key metrics, we still see that PV plus storage has higher amounts in both categories. Interesting to see on the right graphic, we also include standalone storage now. And you can see that even when compared to standalone storage, PV plus storage durations are quite large, but they're quite comparable to what we also observe in the standalone storage market. We go to the next slide, Mark. So on this chart, really want to focus on two things, one of which I've already kind of harped on incessantly in the last few slides, which is there's a lot of storage at PV plus storage plants. But the other thing, which is how Mark opened the presentation, is that this really was a breakout year for not only PV plus storage plants, but also standalone storage plants. And you really can see that in the graphs on the right, where the top one is focusing on cumulative power storage capacity, where the bottom chart is focused on cumulative energy storage capacity. But especially when it comes to that energy capacity, we see that PV plus storage has twice as much storage energy as compared to the operating standalone storage plants that we have in the United States. And so this is something that will be an important trend to follow. 2021 was a big year, but I think, as you'll see when Joe takes the mic, that it's not necessarily the case that this is going to slow down. We go to the next slide, Mark. So another nice thing about EIA's data set is that they provide breakdowns of self-reported use cases for the battery storage that is online as of 2021. And so that's what we show in this graphic, broken out by these popular configurations that we've been focused on. And for the most part, you can see that there is rough similarity across use cases across these configurations, with a few key differences. So the first thing to note here is that grid services do still seem to be the most commonly reported use case. But with the PV plus storage category, we've seen that renewable firming and curtailment mitigation is the most common use case reported in the form EIA 860. And that makes sense, at least for what we've observed, particularly in the California market, where they've seen particularly high penetrations of solar, where curtailment has risen in tandem, and some of the wholesale market trends have incentivized this co-location strategy and renewable firming strategy. And so you see that in the self-reported use case data. Backup power and energy arbitrage were the least popular of these, though I do want to make a point that that arbitrage use case has seen particular growth in 2021. So it has become a much more popular use case, though it is still smaller than the grid services category. If we go to the next slide. So the remaining slides and time that I have, we're now going to focus on more geospatial graphics, just to give you a flavor of where this is happening across the states. So with PV plus storage and just PV hybrids generally, Massachusetts actually contains the largest number of plants, though these all include solar capacity less than 7 megawatts. And this is predominantly due to an incentive program that that state has developed. California, on the other hand, has the second highest PV hybrid capacities, but 12 of them have capacities greater than 100 megawatts, the solar portion of the power plant. And so California, and you'll see this in later slides, is really a dominant player in this market. Wind hybrids, which are the squares in this map, are relatively sparse across the United States, but Texas is definitely a key area where 5 of the 10 largest wind hybrids are in that state. And then fossil hybrids are also scattered around, but in the fossil plus storage category in particular are somewhat concentrated in the state of California as well. Next slide. So here you see some of those same trends, but now we've aggregated the results so you can more clearly see some regional patterns. And so this is where really that California story comes out, where you can see both an aggregate generator capacity of these 3 different hybrid types, as well as aggregate storage capacity that CAISO, the California market territory, is really leading the way with developing these hybrid power plants. Next slide, Mark. And so now I have 2 more slides left where I really just want to focus in on wind hybrids and solar hybrids. And so what you see here is kind of the combination of maps from the previous 2 slides. And the main story is that if you joined our webinar last year, actually this slide doesn't look too different. And hybrid wind plants saw limited growth in 2021. They have been getting created basically every year, all the way back to the mid 2000s, but they just haven't seen very rapid growth over time. And if we go to the last slide that I'll talk about, this definitely contrasts with PV plus or PV hybrids generally. But if you look at that graph on the right, you can really see the uptick in 2021 and how it is correlated with solar and storage. It's important to keep in mind, the fossil line is particularly big on this chart, and I haven't mentioned this before, but we do find very small PV plants that are situated next to a fossil plant's point of interconnection. For the most part, these are just fossil plants that have a trinkle of PV, but for comprehensiveness, we do include them on this graph. But again, the real story here would be the PV plus storage. And you can also see that all of the activity in both Massachusetts and California. Great. So with that, hopefully I'm doing decently on time, and I'll turn it over to Mark.
All right, thanks, Will. So given the large amount of new capacity that came online in 2021, one of the tweaks that we thought we would make to the report this year would be to delve a little bit more deeply into what some of those online plants look like, and perhaps even include a few case studies. So one of the things we looked at is the relative prevalence of AC versus DC coupling among the operational PV plus battery plants. And for those of you who may not be familiar with this terminology, there are essentially 2 ways to couple or bring together solar and battery technology. And those are shown in the schematic over on the right here. At the top, we see what's known as AC coupling, where each individual component, the solar array and the battery, each has its own inverter, which converts the output from DC to AC terms. And then once it's in AC, it's sort of combined and fed into the grid at that single interconnection point. For DC coupling, the difference there is that both components share a single inverter. And also with DC coupling, the solar array is able to charge the battery directly via a DC to DC converter. And there are pros and cons to each type of coupling. With AC coupling, you tend to have a little more flexibility because each of the components has its own inverter. Whereas with DC coupling, you lose some of that flexibility, but perhaps you experience some cost savings because you're not buying as many inverters. And also with DC coupling, it's possible to charge the battery with solar generation that would otherwise have been clipped during peak production periods. So there are pros and cons of each. And so what we did was to look at the relative prevalence of AC versus DC coupling among a subsample of 35 PV plus battery plants, each of which had PV or has a PV capacity of larger than 5 megawatts. So these tend to be the larger plants in our sample. And in fact, these 35 plants account for about 90% of all PV and storage capacity among operating PV plus storage plants. So it's a fairly large sample, at least in capacity terms. And what we found here is that 27 of these 35 plants are AC coupled and 8 are DC coupled. So that's a pretty big imbalance in favor of AC coupling. But you need to consider the fact that 16 of these 35 plants involve battery retrofits. So in other words, the battery was added to a standalone PV plant after the fact, after that PV plant had been operating for some time. And that type of retrofit application typically favors AC coupling, because with AC coupling, you're able to install the batteries in kind of one centralized location rather than having to go back into the array and sort of scatter the batteries throughout next to each individual inverter. So if you exclude those 16 retrofits and just focus on the 19 greenfield plants, then what you find is that 12 of them are AC coupled and 7 are DC coupled. So, still a little imbalanced, but what we also found is that 5 of the 7 DC coupled plants came online in 2021, perhaps suggesting that the market is growing a little bit more comfortable with DC coupling. Okay, on that last slide, I mentioned that we are seeing a bunch of battery retrofits, and so we thought we would include a table here to provide some detail on some of those plants. For the most part, in 2021, that activity was concentrated in California and Florida, but it is happening in other states as well. For example, I think there's quite a bit of retrofitting going on, maybe in Arizona this year and some other places as well. This trend has been driven by several private letter rulings from the IRS, which found that not only can a battery qualify for the solar ITC if it is coupled with and primarily charged by a solar plant, but you can also add that battery after the fact, after the PV plant has already been operating, and it will still qualify for the solar ITC. And so as a result, we've seen a lot of activity, a lot of retrofit activity, which makes sense if you think about how many large PV plants there are out there that could accommodate a battery. Just to pull a few interesting things out of the table here, over in the final row, you can see that the energy storage agreement term tends to run about 5 to 10 years shorter than the standalone PV PPA term. And that presumably reflects the sort of the relative expected useful life of each of these assets, with the batteries being a little bit shorter than the PV modules. That said, on many of these solar PPAs, a number of years have already elapsed, which means that the terminal date of these two agreements is actually fairly well synced up in some cases. We can also look at the battery durations, and you'll notice here in California that we're looking exclusively at 4-hour batteries. That's driven by the California Independent System Operators requirement that a battery be able or have at least a 4-hour duration in order to qualify for resource adequacy or full capacity credit. In Florida, we don't see that same requirement. And as a result, the 3 batteries installed there in 2021 in retrofit applications were shorter duration batteries ranging from 2.2 to 2.5 years. And that finding is consistent with some modeling that Will has done in the past, actually, that found that in the absence of a regulatory requirement for 4 hours of duration, that shorter durations such as 2 hours might actually make more economic sense, at least given the current state of the market and current market penetration levels. So moving along here is our first case study. This is of a big PV plus storage plant in California. This plant started to come online in 2021, but finished up earlier this year. And so I don't think this plant is actually included in the numbers that Will just presented. This is the Slate PV plus storage hybrid plant in California's Central Valley. It's a big one. It's got 300 megawatts of PV, coupled to 140 megawatts of 4-hour AC coupled storage. And you can see the big AC coupled battery field here in the foreground of this photo. This plant is so big that it has 5 different off-takers to fully absorb its output. One of those off-takers is buying just a portion of the PV generation only and not buying any storage. The other 4 are buying both PV generation and resource adequacy via the battery. And in those 4 cases, the off-taker or the buyer controls the battery dispatch, which is generally how it happens within these agreements, though not always. Logically, if you're paying more to have a battery attached to your plant, chances are you will want to be able to control how that battery is dispatched. All right, for our next case study, we're going to fly across the country here to New York, and we're looking at a much smaller plant. In this case, this is a 10 megawatt, 40 megawatt hour DC coupled PV plus storage plant, whose purpose is really to relieve congestion at a congested substation nearby. This plant came about as the result of a 2018 RFP issued by the local utility, National Grid. And that RFP specifically sought non-wires alternatives to relieve congestion at this specific substation. The RFP included very specific technical requirements that any successful proposer would need to abide by. And I've listed some of those here just to give you a flavor of what those look like. It also included a cost hurdle or cost benchmark, whereby the utility estimated the net present value of deferring for a 10-year period what would have been the traditional solution to this problem, which is typically to kind of rebuild or upgrade the transmission and distribution system near the substation. And that amount came to $13.8 million, which provided a bit of a hurdle for the proposers to kind of target and try to beat. So this plant is up and running, and when it's not doing its job of relieving congestion, it is free to play around in New York's wholesale electricity market. And for our final case study, we're going to jump back across the country to Oregon, and in this case, look at a plant that not only includes PV plus storage, but also wind. So this is the Wheat Ridge project in Oregon. It's another big one that came online earlier this year. So it's got 200 megawatts of wind, 50 megawatts of PV, and 30 megawatts of 4-hour storage that, in this case, is DC coupled. Once again, up in the table, you can see that the battery term is 10 years shorter than the wind or solar contract terms. Down at the bottom, we've run some fairly crude simulations to estimate the generation profiles of the wind and solar resources. We're not including the batteries in these graphs. And you can see that on a diurnal basis, which is the left-hand graph, these two resources are very complementary. On a monthly basis, which is the right-hand graph, I would say they are perhaps only somewhat complementary. But overall, it does seem to make sense to pair wind and solar at this particular location. And then if you throw in the 30 megawatt battery, you can firm it up all the much more. Okay, so the final slide in this segment kind of harkens back to this subtle distinction that we've talked about on a few occasions between co-located and full hybrid models. In most instances, we don't really know which individual plant is pursuing which of these two models. But in California, the system operator does provide some data on this. And so this graph over on the right summarizes the co-located versus full hybrid models in CAISO, both for operational plants as well as plants expected to come online over the next 2 years. And what we find is that in general, the co-located model dominates by far. And that could be for at least 2 reasons. One being this trend towards retrofits, which I've mentioned already. In general, a retrofit is probably going to favor a co-located approach, since you are simply adding a battery to what had already been a standalone PV plant. So it probably makes sense to continue to operate those resources somewhat independently. The second reason might be California's participating intermittent resource program. which exempts variable wind and solar power from penalties relating to scheduling errors or forecast errors. And my understanding is that any hybrid plant that elects a co-located model is able to remain within that program and not face those penalties, whereas full hybrids are no longer exempt from those penalties. So that's probably a driver here as well. Okay, so that does it for the kind of the operational section. So now I guess we're going to move on to talk a little bit about PPA terms and prices from a sample of PV plus battery plants that we've been tracking. This sample includes 67 PPAs across 10 states, totaling 8 gigawatts of PV and 4.5 gigawatts or 18 gigawatt hours of batteries. You can see the sample is pretty heavily dominated by plants in Hawaii, California, Nevada, and New Mexico. These are all high solar penetration states where it obviously makes sense to hybridize. About a third of these PPAs are for plants that are already operational, with the rest either under construction or still in development. And then 6 of the operational plants are retrofit plants that I showed on an earlier slide. So here we see the all-in levelized PPA price for these PV plus battery plants. In this case, we're looking at 61 of them. I've excluded the 6 retrofits from this slide. And I've broken out these prices geographically, separating them into plants that are in Hawaii, which are shown here in orange, and then plants which are in the other 9 states on the mainland, shown here in blue. All 3 of these graphs show exactly the same data, with the only difference being what the size of the bubble represents. So in the upper left graph, the bubble area represents the battery capacity. In the upper right, it represents the PV capacity. And in the lower right, it represents the battery to PV capacity ratio, which is also known as the storage ratio. And let's just focus on this bottom right graph here in the interest of time. So you'll notice kind of two trends here that are worth discussing. First, PPAs in Hawaii are obviously priced at a bit of a premium, and there could be a number of reasons for that. First, Hawaii is obviously an isolated island state where just about everything is more expensive. It's also the case that in Hawaii, solar and solar plus storage tends to compete against expensive oil-fired generation. So there could be some opportunistic value-based pricing going on here as well. And then finally, it could also have something to do with what this graph shows, which is that in Hawaii, the storage ratio has traditionally been pegged right at 100%. And that is because Hawaii's grid is already pretty well saturated with solar, with rooftop and utility scale solar. And they want to be sure that the battery is large enough to absorb all of the output coming from any new PV plant during peak midday generation periods, so that that power does not, flow out onto an already congested grid. And obviously, the larger your storage ratio, the larger your battery, which adds costs, which in turn will push up your PPA price. The second notable trend here is that you can see for the other states, the blue bubbles here, the trend line is much flatter. It shows almost no decline in PPA prices. And again, this could have to do with this storage ratio story that I just told. Specifically, on the mainland, the first few hybrid plants, or the early hybrids, tended to have lower storage ratios, maybe only 30 to 40%, as a way to kind of for developers to sort of put their toes in the water, if you will. But over time, as comfort has grown with these systems, we've seen the storage ratio kind of creep up somewhat on the mainland. If you squint at the graph, you can kind of notice the bubbles growing larger over time. And again, that higher storage ratio means a larger battery, larger costs, which can dampen what would otherwise be a decline in PPA prices. Okay, 34 of these PPAs break out the PV pricing from the storage pricing, which allows us to calculate what we call a levelized storage adder. And that's what I'm showing here kind of in 4 different ways. You'll notice in this case, I am including the retrofits. Those are shown here in gold. And what you see there is that the retrofits are generally priced at a premium or priced above market. And that makes sense if you consider that retrofits typically will not be able to take advantage of any sort of construction cost savings that you would otherwise get if you were to instead build both components at the same time. So let's actually ignore the retrofits and focus exclusively on the greenfield plants, which are shown here in green. So in the upper left graph, we're showing this levelized storage adder over time in dollar per megawatt month terms. And that is typically how storage is priced within these energy storage agreements. In other words, storage is typically paid a capacity payment or a tolling payment, and that is usually denominated in dollars per megawatt month terms. So there you can see that the time trend has kind of leveled out and even increased somewhat recently, which is consistent with what we've been reading in the trade press regarding supply chain challenges and inflationary pressures. If we go over to the top right, here we've converted the pricing into, or we've converted the adder into dollars per megawatt hour stored terms. And that is based on an assumption of one full cycle of the battery per day, which again is a pretty standard assumption within these energy storage agreements. In this case, the graph looks pretty much exactly the same. And the only difference here really is are the numbers on the y-axis. Down in the bottom left, we've made yet another conversion, this time to dollars per megawatt hour of PV generation terms. And this is the way that you'd want to look at it if you are trying to answer the question, by how much will my standalone PV PPA price increase if I add a battery? And the answer to that question, at least based on this graph, appears to be somewhere between $5 and $20 per megawatt hour of PV generation. And that range of 5 to 20 depends pretty heavily on what you see in the graph in the bottom right, which again is the storage ratio. So you can see there's a pretty strong linear trend between the storage ratio and the levelized storage adder. The higher the storage ratio, the higher your adder. And that range again is somewhere between $5 and $20 per megawatt hour, depending on the ratio itself. So with that, let me turn it over to Joe, and he can tell us what is coming through the pipeline.
Thanks, Mark. So yeah, in this next set of slides, I'll focus on what we consider a longer term development pipeline for hybrid plants. I'll try to move pretty quickly through 10 or so slides so we have plenty of time for Q&A at the end here. There are a bunch of great questions, so keep those coming if you have them. The data I'm going to discuss here are drawn from interconnection queues of transmission operators across the country. So just quickly, for those who might not be familiar with that data source, interconnection queues just represent the set of power plants that have applied to connect to the electric grid, but are not yet built. So these are proposed plants that are undergoing a series of interconnection studies to understand the impact of injecting new capacity at a specific point on the grid. And those studies also establish what transmission upgrades would be needed for that resource to connect at that point. Next slide. So in terms of where we draw that data, we collected interconnection queue data from all 7 of the ISO RTOs across the US, as well as 35 or so utilities that are in non-ISO regions. You can see those outlined on the map over here to the right. We estimate that these data sources represent about 85% or more of the US electricity load. So it's a pretty robust sample. Now, I want to stress that the data include projects that connect to the transmission or bulk power system. So we're in this next set of data, we're really not covering kind of those smaller distribution side or behind the meter hybrid plants. And again, the data represent a snapshot as of the end of 2021. Now, in terms of identifying hybrids, I will say in some cases the queue data are incomplete or imperfect for these hybrid plant details. So we made an effort to identify hybrids where we could, but some regions that required manual matching, and it may be the case that we missed a few through that process. And then final point to note on kind of methods here is that for generator plus storage hybrids, the storage capacity was not always provided explicitly. In fact, it was only provided in about half of the records that we collected. So for the remainder, we actually had to estimate or kind of impute that storage capacity from other known plants where it was provided. Next slide. So this figure highlights the total capacity in gigawatts, shown there on the left axis, gigawatts in the queues over time. So the x-axis there is just kind of a time series from 2014 to 2021. This is broken out by generator type. And you can see that the total height of the bar represents the full cumulative capacity in the queues as of that year. And the hatched portion of each bar represents the capacity that's in some sort of hybrid configuration. So just in general, we see really explosive growth of solar and storage in the queues over time. Focusing on just the hatched portion, hybrid capacity, we also see strong growth in recent years, especially for solar hybrids. But I should note that we only started making that estimate of hybrid storage beginning in the year 2020. So that's why you see a little bit of a discontinuity and the hatched portion for those blue bars only beginning in the year 2020. Next slide. Now, out of about 8,000 or so total plants that we found active in the queues, we identified just about 1,500 hybrid power plants. Notably, over 90% of the proposed hybrid generating capacity in the queues is for solar plus battery plants, representing over 280 gigawatts in that case. Now, the next two largest proposed hybrid configurations are wind plus battery and solar plus wind, but those represent only 4% and 2% of the proposed capacity, respectively. I'll also note that the year-over-year growth in hybrids that we see in the queues is really remarkable. So, for example, hybrid capacity in the queues was up about 77% in 2021 compared to the year prior. And just in terms of number, Mark mentioned this earlier, but the number of hybrids is up about 70% compared to 2020. Next slide. All right, digging into a little bit more detail on the types of hybrid plants that we see in the queues. The figure on the left here just illustrates the proportion of the total queued capacity in hybrid configurations for a few different generator types. So just starting with solar on the left there, you can see that there's about 676 gigawatts of solar in the queues, but 42% of that is in some sort of hybrid configuration. Now that compares with wind, for example, where we have about 250 gigawatts in the queues, but just 8% of that wind capacity is in a hybrid configuration. And just finally looking at storage on that bar there, roughly half of all the storage capacity in the queues is paired with some kind of generation. Now on the right, what looks like kind of a giant waffle there is a figure where each square represents about 1 gigawatt of capacity in the queues. And the different colors of the grids or of the squares represent different hybrid configurations. Now, this is really just to illustrate again that solar plus storage configuration is by far the dominant configuration of all these different hybrid types we see, with solar plus storage having about 281 gigawatts of capacity in the queues. Next slide. Now, there are also pretty substantial regional differences in these proposed hybrid plants that we see in the queues. So, for example, we see solar hybrids are somewhat widespread across the country, but certainly highest in California and the non-ISO West, where, for example, in California, we see 95% of all proposed solar capacity is in hybrid configuration. And in fact, if we just look at solar plants that entered the queues in 2021 for that California ISO, that number is about 99% of all solar capacity entering the queue in 2021 in CAISO was paired with storage. Now, wind, that second column, certainly wind hybrids are less common overall, as we've seen. and are also more geographically concentrated in California and the West. The few gas hybrids that we see are really only located in California and Texas. Next slide. And again, we're kind of showing here the regional distribution of just 3 plant types from the queues. So we have wind plus storage on the left, solar plus storage in the middle, and standalone storage on the right. And again, it's just really clear that solar plus storage is just an absolutely dominant hybrid configuration here in terms of the total proposed capacity. But we also do see that kind of geographic concentration in the West and California. But some other regions like PJM is kind of a standout, are also growing. So we are seeing more interest in hybrids and also standalone storage increasingly in other regions apart from the West. Next slide. Now, the queue data also give us some indication of when these plants might actually come online, but these data should be taken with a little bit of a grain of salt, as these kind of target online dates are rarely met. But just as an example, we found about 71% of all of the hybrid capacity in the queues was proposed to come online by the end of 2024. That's shown on the top figure here. And turning to the bottom figure, and this is perhaps more important and more telling, this is breaking out all the different hybrid projects by their interconnection study status, or kind of where they are in that process, working their way through the queues. And we found about 12% of all hybrid projects already have a signed interconnection agreement, and those projects or plants are just much more likely to actually come online. Notably, there's over 35 gigawatts of solar plus battery with a signed interconnection agreement, and that compares to less than 1 gigawatt for each of the other hybrid types shown here. Next. So we were also curious about the ratio of storage to generator capacity among these proposed hybrid plants. Will mentioned this a little bit earlier for the existing and online plants. So this kind of could be compared to the statistic that Will showed earlier. Across all regions, we see typical storage to generator capacity ratio is higher for solar plus storage projects than it is for wind plus storage. The typical ratio is about 88% for solar plus storage and about 50% for wind plus storage. Again, that's higher than what Will showed earlier. That ratio is higher than what Will showed earlier for the installed projects. It's also worth noting that the storage ratios are higher for where solar penetration is higher, such as California and the West. Next slide. All right, this is my last slide, and just to highlight one more interesting nuance here is that just for the California ISO, we were able to compare the total proposed hybrid capacity to the capacity limit at the point of interconnection. So in other words, the maximum capacity that they could inject or export to the grid at any given moment. That POI limit was typically based on the generator capacity alone in the case of solar plus storage plants. Which kind of suggests that those solar plus storage plants plan to maximize their POI limit or point of interconnection limit by using storage to just supply power when the generator is not at full capacity. Now, wind plus storage plants seem to provide a little bit more headroom for storage to possibly fill in even when the wind plant is operating. But nonetheless, still in many cases, probably that storage would be dispatching power when the wind plants are not fully operating. Next slide, and I'll pass it back to Mark.
Okay, thank you, Joe. So just to wrap this up, hopefully we've convinced you that 2021 was a big year for hybrids in the US, and in particular for PV plus battery plants. Not just among operational plants or plants that came online, but also, as Joe just demonstrated, within the interconnection queues as well. Again, everything that we've presented today predates the Inflation Reduction Act, and so we'll have to keep an eye on how the incentives within that new law will impact the hybrid market going forward. And I think at this point, given that we have about 10 minutes left, maybe it does not make sense to kind of run through the bullets on this conclusion slide, given that we've already talked about all of this, I believe. So why don't I just leave this slide up here in case anyone wants to read it, and we can just go directly to Q&A. I think that's probably a better use of our time.
Yeah, I
So,
think that makes sense.
yeah.
And Mark, I'm happy to kind of direct some of these questions. We do have a lot of great questions. We've answered some of them in the Q&A function here, but we'll go ahead and start diving in. So there was a question about basically the use case for fossil fuel plants that are paired with storage. So maybe I'll direct this at Will. What's the advantage of using storage versus just using more fossil fuel? And I will also note that I think Jerry in the Q&A provided maybe some insight there too, but Will, go ahead and chime in if you want.
Yeah, no, so I think Jerry provided some of the answers, and I can just provide a little bit more detail there. Is that what we see and what we're told is that when you pair a battery with these fossil units, you basically affect what their minimum output needs to be in order to provide ancillary services. So with a lot of these ancillary services, you historically have required fossil fuels plants to operate at some minimum level, which isn't necessarily the most efficient, and in which point they'll release emissions as well. And by pairing the battery, you basically allow them to both sell those ancillary services while not operating. So that is really, I would say, one of the key angles that we've seen in the market, and that gives these units kind of access. What we haven't done is empirically studied any of those trends. So we've definitely heard this, that they facilitate market participation and lower emissions and fuel consumption, but it's not something we've looked into yet, and it might be something that's on the agenda for us to research in the future.
Great, thanks, Will. I think for the next question, maybe I'll direct this to Mark, but this is a great question about standalone storage is now eligible for the ITC in the Inflation Reduction Act. So how would that affect the trend for the hybrid plants that we've seen in the past? Maybe would we see more storage kind of directed in standalone format?
Yeah, that's kind of the question that's on everyone's mind, I think. And I think it makes logical sense that going forward with the standalone storage ITC, that will probably there's less impetus to hybridize or combine the storage with a solar plant. And so my guess is we'll see a pretty significant expansion of the standalone storage market. That said, there are still some compelling reasons to combine storage or a battery with a solar plant. One being you can maximize your interconnection limit. Obviously, a solar plant reserves a certain amount of interconnection capacity and transmission capacity, and is only utilizing that capacity for a short portion of the day. And so if you add a battery, you can kind of backfill and take better advantage or fuller advantage of the transmission and interconnection capacity that you've been allocated. The same goes for permitting and siting considerations as well. I mean, these batteries don't take up all that much room, and so you can pretty easily retrofit a battery onto an existing PV site without really having to kind of expand the footprint of that particular plant. And so, given the logjam and interconnection queues and permitting hurdles and all of those troubles that we've all heard about and that Joe's done a lot of work on in particular, adding storage to an existing PV plant or developing storage and PV together can still make a lot of sense, even if it's no longer the only way to capture the ITC for the battery portion.
Great, thanks, Mark. So let's move on. There's an interesting question here about, again, kind of about use cases, specifically about arbitrage. So maybe Will or Mark, if you guys want to address this one. So does arbitrage mean that those storage projects are operating without a PPA? And are these plants concerned that arbitrage opportunities might decrease in future markets?
Yeah, I can start and then maybe pass it over to Mark, because I think there is a a corresponding question about who controls the capacity in these batteries that Mark may be able to speak a little bit to, that Chad had about PPAs. But in general, arbitrage does not necessarily mean that these plants are not operating within a PPA. It depends on obviously the specific plant. But you could imagine these plants selling a PPA and then giving the rights to operate that battery in different ways to either a utility or some other off-taker. And that off-taker might still choose to participate in energy markets. And that's what we mean by arbitrage is really charging that battery. At least in California, the business model has been charging that battery during the middle of the day when sun is producing the most, and then arbitraging that when the sun is setting and load is rising. So PPAs do not exclude that activity, but maybe Mark can add a little bit more flavor on what you've been seeing in the PPAs in terms of who's controlling this battery capacity and kind of what they typically ask for in terms of participation in these markets.
Yeah, so most of the activity here has been in California, and in general, the way it's been happening there is that these hybrid plants do sign PPAs with utilities or community choice aggregators, and they're typically paid a capacity payment for the storage portion. So that is just like a fixed dollar per megawatt month amount that does not depend on or does not vary based on how the battery is used. And so the project owner is kind of indifferent as to how the battery is operated. And in most cases, the off-taker will control how the battery is stored and dispatched. And so it's really up to the off-taker to decide how they want to use that battery. And if there are arbitrage opportunities to shift generation from low price periods to higher price periods, then presumably they will try to take advantage of those.
All right, great. Thanks, guys. So maybe we have time for one, maybe two questions here. There was a question that got a couple of upvotes here about battery degradation. So can either of you speak to that? How long do these storage systems last? Is it comparable to the expected lifespan of let's say the PV or wind plant that they're associated with?
Yeah, I can say a little bit about that, but maybe Will can jump in then. In general, the project owners are expecting to have to augment the battery capacity over time because batteries are expected to degrade somewhat. And some of these PPAs contain explicit augmentation schedules, which really lay out, by certain dates, the project owner will, ensure that there's enough capacity to meet the contracted amount. There are several different ways of dealing with degradation. You can either overbuild from the start or augment over time. But people are certainly thinking about that. As for actual degradation rates, I don't have a great handle on that. Will might, based on some modeling work that he's done.
Yeah, we have looked at this mostly to see how degradation might impact the end of life of a battery that is operating in an energy arbitrage mode, and therefore the corresponding costs. And I would say, and this I think comports with some of the warranties you see in the market, is that these batteries are definitely expected to last more than 10 years. Really, oftentimes you see them 20 years out, especially if they are taking advantage of some of these strategies that Mark mentions of overbuilding, letting it degrade over time before fully replacing it. But a lot of these systems are modular, and so it does allow for this kind of replacement opportunity. But if you want, a number, 20 years is definitely what we've heard. But I think the degradation story has improved a lot over the last 5 years. So this is kind of a rapidly changing landscape, and these systems are getting better. So I'm sure it's a number to track going forward.
It looks like we are at the top of the hour here. I mean, I could stay on a little bit longer. I don't know if my co-presenters can or want to. So I just want to make note of the time and thank everyone for joining. But I'm happy to stay on a little bit longer if others are also willing.
I can do that if you want, Joe.
Let's just take maybe one or two more questions here and then.
Sure.
we'll call it.
Yeah.
So I did think there was an interesting question here, maybe a good one for Will, if you're willing, asking about loss from transmission lines, supplying the grid from different locations. So Will, I know you've done some great work looking at kind of the advantages and disadvantages of co-locating, storage with generation versus kind of siting it just elsewhere on the grid where it maybe could be more valuable. So do you want to talk about that work a little bit?
Yeah, I can talk about that work. And it somewhat relates even to this ITC question that we were floating around earlier. The work really early on was motivated by the fact that on our grid, we have lots of different points in which you can interconnect, and those points have different market values. And so there was some question about whether the fact that the ITC was only going to co-located units, of whether that was disincentivizing some places that might not be able to have a solar system from installing a standalone battery. And so that's, I think, the work that Joe is referencing. And what we found is that there is definitely some diversity, that there are congested regions of the grid, potentially closer to load centers, that might not be able to take a renewable plant, but a battery would be more valued there. And so that gets a little bit at this question of loss from transmission lines, this notion of siting batteries closer to load, potentially in places where building a full hybrid plant is a little bit more challenging to do because of land requirements. But importantly, with that work, we actually didn't find a huge, at least market value loss when that co-location happened. There was a small amount of loss, but it was dramatically outweighed both by the investment tax credit, but even by the points that Mark mentioned earlier about cost savings on just developing this project in tandem, avoiding those transmission interconnection constraints. And so there's definitely the story about location being important, but it's not the only factor in why we might be co-locating and supplying electricity from these hybrid plants.
Sounds good. Thanks, Will. Maybe I'll just let Mark have the final word here. Mark, if you want to pick any question if you can, are you able to see the Q&A now, Mark?
Yeah, I can see it.
Either that, or if you want to just close us out, I'll just let you have the final word.
Yeah, well, why don't we go ahead and close it out, and we can try to get back to folks if they've left their contact information on some of these remaining questions. So I want to thank Will and Joe for co-presenting today. I want to also thank the U.S. Department of Energy, and in particular the wind office and solar offices, for funding this work. And I want to thank you all for attending. This webinar will be recorded, or has been recorded, and will be posted on our website within probably a few hours. So thank you, everybody, and have a great day.
Thanks, everybody.
Thank you.